What's going on, guys? Welcome to today's episode. My guest today has facilitated billions in private real estate capital without ever being a broker, a sponsor, or charging LPs a dime. He is the guy who quietly sits between GPs, the general partners who have the deals, and LPs, the passive investors looking to park capital with the right sponsor. And he has been somebody that has gained insane experience watching how capital really moves. You're going to learn a lot about his insights on all of those lessons in today's episode. He went from underwriting at a $10 billion public REIT to building what might be one of the most efficient capital matchmaking platforms in private real estate today. So if you are a passive investor, you're a syndication junkie, or you're just somebody who wants to get more access to smarter deal flow, this episode is going to help you sharpen your edge. Today's guest, Aleksey Chernobelskiy. Welcome to the show. Let's dive in. Welcome into the show, Aleksey. How we doing, brother?
Yeah, doing good. Thanks for having me.
Good, man. Well, I know we're going to be diving in to a lot of things on capital markets, GPLP, capital raising, state of the economy, what's going on in the world with, the investing opportunities that are out there, or maybe lack thereof. But I'm curious, maybe take us, back to when you were, playing in the institutional world. What was the moment that you realized yourself that, LP-GP relationships, they were broken, there was an opportunity there in kind of the market that you felt like you wanted to fill with your company? What was it that brought you into the space to, fix this issue that you felt like was, a big opportunity going forward?
Yeah, sure. Fix is a big statement.
It is, right?
I think I'm probably like 0.001% of the way there. But to answer your question, I was honestly completely oblivious to how inefficient the GPLP marketplace was, just because in the institutional side, we were public. And I was a pretty senior employee, but still an employee. And money just appeared. I don't know. It sounds so funny, but because people are like so siloed at large organizations, my job was to run a $10 billion portfolio and a 20-person team that underwrote a ton of deals, and we bought a bunch, billions per year. I just never thought about where do we get money from, and also because you're public, you hit the ATM, so to speak.
Yeah.
And you securitize in the markets, and money almost just appears. Again, it was never an issue, I guess. Due to size and due to the fact that we were public. Then I left about 4 years ago, started exploring sort of the lower middle market GPLP space here in Phoenix. And then it just dawned on me that boy, this space is has a lot of really interesting characteristics. Meaning, on the one hand, there are a lot of people that are placing real money, certainly real to them as a percentage of their net worth,
Yeah.
and also real in aggregate. The numbers are gigantic in terms of annual investment in the US into syndications. And yet, no one seems to be building in the space in terms of access to more deals, comparing deals, understanding deals. It all sort of seems to be I joke, but it's when I initially started advising a ton of LPs, I don't do so much of that now. I'm just too busy with GPLP match. But a lot of LPs would ask me what should I do to find more GPs? And I always struggled with that question because the answer is just so 50 years ago or 20 years ago. It's well, I guess you can Google it. I guess you can go to a conference, but you hope that it's the right one. I guess, you can go golfing with someone and hope that they know what they're doing. Right. So where is it? Right. Meaning the same person is deploying $1 million into his, friend's, uncle's, girlfriend's, boyfriend deal. And yet it's just so hard to find other options. And in my view, I guess, the only way to get better at investments is just comparison. It's like it's a private world for a reason, and it's very difficult to like figure out what's better. What's better is all relative, right? So you
Right.
need access to more stuff. You need to spend time understanding it, and that's what really like got my start.
I love that. And so, for those that don't understand what your company is, GPLP Match, how do you explain it to investors that are looking for exposure to real estate, whether they are investors and on the GP side themselves, or if they're just a passive individual that's looking to
Yep.
park some capital with a GP who has a deal that they're sponsoring? What is it that you guys do?
I think it's the easiest way to describe it is matching GPs and LPs.
Just like the name says, right?
Yeah, it's what you would expect. So, GPs submit deals. LPs tell me what types of deals they want to see. And, there's like 20 different filters that an LP can fill out, ranging from um, property type, state of the property, how experienced the manager is, how high the acquisition fee is, right? Like there's all these filters that you could hypothetically put in. And the whole point is you tell me what you want to see as an LP, and my job is to not email you unless I see it. That's simple.
Yep. Now, when you have, maybe we'll talk to the passive investors right now, the LPs that are looking for more exposure to real estate investments and are trying to discern what's the right deal, what's the right risk profile, asset class, market, the right sponsor. You mentioned a lot of these kind of filters or variables in terms of, call it, suitability for parking capital in the right deals to achieve kind of that mutual win-win benefit. What are some of the things that you think are most important when you're talking to your LPs about their due diligence on a deal or an investor that they should be aware of?
So I have like I guess, a strange way of thinking about this. There's only like a few things, in my opinion, that should just make you walk, right? Like, just as a few examples, like if there's no um, return of capital clause, meaning the LP gets paid before the GP starts making money on a capital event. Another one is like the word guaranteed anywhere in the deck or the PPM, in my opinion. And I have like much lengthier discussion on this, but like in my opinion, that should basically make you like say goodbye and probably not speak to them again. And there's like a very few things that like really should turn you off to the point of never speaking to the GP again, so to speak, right? Or just not wasting your time, right?
Yeah.
Um, why is that? Because I believe that you should actively compare a deal of a brand new sponsor to a deal of an experienced sponsor. Now, you would expect, I think most people would, that if a sponsor is experienced, right? So they have more experience, hypothetically, right? Um, Looking through the deal, finding a good one, right? So it might be easier to invest in that one, but it is also true that an experienced sponsor at some point can show their weight, so to speak, in terms of their terms to LPs. Like they already have developed a bunch of LP relationships, and so they can have less favorable terms to LPs as a result. Many do, and that's okay. That's just sort of like demand and supply, right?
Right.
Um, and whereas a brand new sponsor might be open to giving you much better economics, but you need to sort of stomach the execution risk that comes with a brand new sponsor. Like maybe they have never closed on a deal before. Maybe they don't really know what happens after you close and you get some surprises, right? And both are okay, right? That's the whole point. Is like I think there's a discovery process that needs to happen to help LPs understand what they like. That's really ultimately what they should be after.
Now, what are some of the things that you believe, sophisticated LPs do better than the newer LPs that, you know, they all got some dry powder, they're all looking for opportunities, but what are some of the things that you think, separate those that have consistent track records of winning by selecting the right GPs or deals? And what are some of the ones that you think lead to some of the mistakes that you've seen, lead to loss or capital calls, or maybe there's a mixture of, the two in between there?
I hate to say this because it's sort of like it sounds biased, but I really believe it. Like expanding the horizon of your deal flow is like the best thing you can do for yourself. The difference between the institutional person and the average retail person, one is they're deploying different check sizes, right? That's
Yeah.
fair. But putting that aside, the difference is the two inboxes are almost not comparable to one another. One is getting a ton of deal flow, the other one is getting very little. One is getting the quality of the deal flow that the institutional LP is getting is much better generally than the inbox that's in the retail LP, right? And so the only way to correct for that is to sort of like I hate to say it, maybe it's offensive to people, but it's like your inbox is the sample size. It's a sample of the overall deal population, right?
Yeah.
Meaning at any given point, there's 1,000 deals. I don't know. I'm just making it up, but probably more. 1,000 deals that are getting fundraised for. So are the three deals in your inbox representative of what's out there? Or are they like a very bad sampling of that 1,000 live deals? Right. And so how do you find out? You compare, right? Like you take a look at what's out there and you're like, like this is actually pretty interesting and it looks a lot better than the one that's in my inbox. Right. But the only way to do it is, obviously GPLP match is meant for this. But you can ignore GPLP match and like maybe like speak to other people, get on different lists, right? Like, but the point is, I actually wrote like a longer article on this called "Deal Flow Rules the World," and I sort of like said it tongue in cheek, but it's really true. Like, as an LP, if you want to find alpha and like sort of like the best deals, you want to make sure that you're looking at the right sample of deal flow. If you're not, then like you're selecting in a subpar um, sandbox,
Yeah.
right? And you don't want your sandbox to be subpar to start with, and then spend a bunch of time on diligence.
Yeah, I've been telling people, I talk with a lot of investors that want to break into commercial real estate or they want to syndicate their first deal or whatever it may be. And, when they're looking for those opportunities, and the same thing on the LP side, right, is the more volume you have coming through your pipeline over time, one, you're going to build that repetition of understanding, what your likes and dislikes are, what demographics or market dynamics you look for, what risks, align with your profile or not. But also, right, just through that repetition, not only are you going to sharpen your skills, but you're also going to, over time, start to identify maybe some outliers that really stand out of like, oh, that's what a good deal looks like, right? Versus a lot of the middle of the pack type of deals that, unfortunately we've seen over the course of the last few years, just obviously because of a lot of the market dynamics. But like you said, right, I think repetition and deal pipeline is really important. So obviously there's GPLP match. How do you suggest, I always call it kind of like, you're the jockey and you got to find those race horses that are running around the track and running the race consistently. Um, how do you see some of the best LPs identify, finding that deal flow, finding those sponsors? What historically have you seen work out the best? Outside of obviously your awesome platform that you guys got.
Um, well, yeah. So outside of the platform, I think it's sort of like networking groups and Google, I guess, podcasts, maybe conferences, right? Like it. I think it's like it is already like a very tedious process for the average LP, in my opinion, right? Meaning, the alternative is like put your money in the S&P,
Mm,
and I would call that like truly passive, right? I do not personally consider LP investments to be passive. You can argue that they're a little bit more passive once you invest, but getting to an investment, I think, is a very active, like pretty intense process, in my opinion. And I think if it doesn't feel that way, I would just be careful. Meaning it should take you, I don't know, if you're starting from scratch, I would say probably at least 25 deals. At least if it's like if you've never touched an investment, I think you should look at least 25 deals before investing in one, maybe more, probably more, honestly. If you're sort of seasoned, then you're probably looking at 50 deals before investing in a single one. All of those are tied to different GPs. You need to have those conversations. Some of them you might be like, oh, this is an interesting GP. I'm not sure that I'm ready to, take the ride with them on this specific deal, but let me check in with them after a few months, right? Let me get on their list. And we've seen that behavior a lot, honestly, from especially from allocators. Many of them tend to not invest in the first deal that they see.
Yeah.
And they just say like, hey, interesting. Thanks for walking me through the deal. Let's be in touch. And some GPs actually get upset and they're like, oh man, I spent an hour, right? But relationships take a while.
Yep.
And a lot of this stuff will come back around. I think one other thing I would add is we have seen a very clear request from both sides to meet before having a deal. So GPs want to meet LPs before they have a deal under contract, because obviously once they have a deal under contract, you have a deadline to meet and you're not sure you can meet it. You're not sure you can raise all the money, right? It's a stressful time. From the LP's perspective, somewhat more surprisingly, we've seen the same request, which is, hey, I just don't like getting to know people on such a rush. Why can't I just search a bunch of GPs and have a few conversations, get on their list? Why does it have to be so deal centric? And so literally a week ago, maybe 10 days ago, we rolled out GP search, which is basically the ability for an LP to search our entire database of GPs. So LPs can search for who develops or does value add, what property type, what market, right? Where are they based? Where is their headquarters? Because I want to meet them, right? So a ton of different things that you can search for across our whole database.
That's cool.
And we've seen a ton of people use that, right? So that they sort of start having those conversations, and then ultimately that leads to investment down the line, but it's sort of more proactive.
Yeah, I really like that because I think, to your point, right? This is one of those, relationships that shouldn't be a speed dating. It really should be something where you court an individual. If you're going to part with your, I think of it from an LP perspective, which I'm always on the GP side, but I've built relationships, honestly, through the podcast with many amazing LPs, which took years of them listening to who I am, what I believe in, how I executed on a deal, how did that deal play out over time. And those are things that if you're playing the long game, which I've always said, if you're going to be a GP and you're going to raise money from somebody else, you should always be playing the long game and not make it transactional. Because at the end of the day, you don't want them coming into just one deal. You want them reinvesting with you in multiple deals over multiple decades, right? And so to be able to build that type of trust, it ultimately just takes time. You got to be kind of like a farmer, right? The farmer doesn't go out into the raw dirt field, plant the seed, and immediately think that they're going to yield crop. It takes time. You got to rototill the dirt. You got to water it. You got to go through a lot of, seasons of blood, sweat, and tears to eventually look up and go, man, I've yielded a lot of crop now that I can, I can utilize going forward. And I think that's the right way of thinking about it from a capital raising relationship standpoint. And I would just flip that on its head as an LP, right? That would be if you identify a sponsor who has that same type of mindset and say, hey, whether it's now, it's 6 months, or it's 6 years in the future, no problem. Let me be of value to you. If you have other deals that you're looking at, I'd be more than happy to be a second set of eyes on it, whether, it's our deal or not, right? I think those are some of the best sponsors I've seen really earn that trust and somebody else's hard-earned dollars that ultimately ends up creating a win-win where you guys are able to connect some of those dots.
Yeah. Yeah, I would add two things probably. First, it's funny that you mentioned this. I actually just heard something really interesting. It's a GP that was on a podcast, not real estate GP, but a very big one.
Mm-hmm.
And he said the issue with transactional relationships with LPs, and by the way, let's not ignore the fact that the piece of them are obviously transactional. people are not investing, to a nonprofit, right? They
Right.
actually want to grow what they invested, right?
Absolutely.
But
Yep.
this guy's point was very interesting because he just said, like, if the LP invests purely based on transactional relationship, well, guess what? They're going to pull their money out based on a transactional relationship too, and meaning the same way that they go in, they will come out. And I think his larger point was some GPs will have struggles. You'll have, he's more in the public markets, so like your real LP, so to speak, sort of like understand and stay with you through the downturns because they see like here's what you're doing, here's what you're trying, and it's genuine and it's real, and you're sort of like transparent with them on the upside as you are on the downside as well,
Yeah.
right? So I thought that was like a really interesting point. And then something else, I I always tell people, and I really wish like GPs would listen more. Like you're because again, like people come to me and they're like, "Hey, I want new GPs. I need more relationships. Like I'm trying to buy more deals." And it's like the first thing I always tell people is like your best GP, I'm sorry, your best LP is your existing one,
Mm.
right? By far, like it is 10 times easier, at least, to get more capital from the same LPs that you have than getting someone else. So people sometimes, and I'm not going to pretend like this is easy. Obviously, you have to like, you only have so much time in a day. But my point is, you really want to make sure that your existing LPs feel touched, by like updates. They feel like you're being transparent. Um, because raising capital through them is just so much easier than going to a new channel that you have to develop from scratch. Now, of course, like some people might not be liquid, some people might be sort of tapped out as far as alternatives, fine. Some people might be sitting in difficult deals, also fine, right? But just don't forget about the existing LPs as you sort of like, scavenger for new ones.
Yeah, no, that's honestly a great point, right? I mean, I think from the downside of what I've seen and heard from so many war stories over the last handful of years is probably the biggest one from, LPs complaining about GP side is, the lack of communication, right? I mean,
Yeah,
whether it's a good market, it's a stale market, you got a deal going a little bit sideways, it's off the business plan, interest rates go up, whatever it may be,
exactly.
you should always have that standard and constant frequency of communication
Yes.
because that is the proper way of doing it, right? I mean, and people can respect, hey, if something's gone wrong, at least, he's been communicating, she's been communicating, they're showing us exactly what they're doing. When it's good, it's good. When it's bad, at least we still know what's going on and that they're being proactive. And that's ultimately what you
Exactly.
want, right? Everybody goes
Yeah.
into these deals with eyes wide open, going, hey, I'm a big boy and big girl. I know that, there's risks that go in on these deals, but what people can't stomach is when you go silent on them, when, times get tough and then all of a sudden you shrink and get quiet and disappear. That's a good way to ruin your reputation. So I'm glad that you brought that up. What are some of the other
Exactly.
things that you have seen, being involved in so many different kind of pairings and connections with GPs and LPs that, there's obviously been a lot of challenges that have happened in the last couple of years. Obviously, a lot of things that are somewhat out of control of the GPs and the LPs, with interest rates, with geopolitical stuff, with just overall challenges in the commercial real estate market. But that being said, what have you seen shift as a result of that over the last few years, and what do you think is stuff that should be changed and is bad, and what do you think are some of the things that are great that people are adapting and using going forward?
Um, Oh, look, I mean, I guess I'll address one point. I think your overall point is that, it's been a tough few years.
Yep.
Many LPs are sitting on difficult deals. Um, at that point, an LP needs to make a decision. Like, do I want to continue deploying, or maybe maybe I should sit it out? And I think to be absolutely clear, and many GPs don't like me saying this, but I think probably. majority of the LPs that invested through sort of that hype of like 2020, 2022,
Yep. That was
probably should have set it out. Like they were just not ready to invest in stuff. And unfortunately they did. And now they're sort of like realizing like, wow, maybe I didn't really know what I was doing. Um, Maybe alternatives are not for me, right? So that's okay. That's fine. That's good. That's like hopefully it wasn't too expensive of a lesson. That's what I would say. In some cases, it is like
yeah.
insanely expensive, and I can tell you many stories on that are like painful to hear. But the second option is like, well, shoot, like that didn't go according to plan. What could I have done better during my diligence to learn? Like almost do a postpartum on that deal. What questions should you have asked that you didn't? Um, and then sort of like just recognize for a second that maybe you don't know as much as you need to in order to invest in the next deal. At which point that starts the beginning of education. Like you need
Yes.
to educate yourself. And the best way to educate yourself, again, biased, but like I sat in an institutional seat. The best way I learned is being on the job. Like I just looked at a ton of deals every single day, asked questions. Sometimes I realized the question was dumb, and you're like, oh, okay, learned something there, right? Sometimes I realized I avoided like massive curveballs by asking the right question. And you're like, wow, like that guy literally just lied to me. He literally just lied to me, and I was about to transact with them. I'm so glad I wasn't afraid to ask that question.
Yeah.
Right? But the only way you do that is you got to get yourself out there. You got to look at stuff. And by the way, this is the uncomfortable part in a society where everything should be super quick. Is it takes time. And so I always tell people if you're not willing to spend the time, just don't invest. It's okay. I don't know. Like maybe it's a spicy take, but like I don't know. It's totally fine to go in the S&P. Just that's fine,
Yeah.
right?
Well,
Like
it reminds me of, Warren Buffett and Charlie Munger just, saying like, hey, we only invest in things that we understand. And when you think about
yeah,
how many
yeah.
people lose money, it's often in things that they didn't fully understand. So your point, right? Like that proper due diligence, having a, list of questions, a checklist, that making sure
Right.
that before you part with your hard-earned dollars, that, hey, if all goes to hell in a handbasket, I can live with the results because I
Yeah.
went through all the necessary steps to feel confident, comfortable based on what I needed to see and hear to let that money go.
Exactly.
And at the end of the day, you're not going to win them all, right? And like you said, sometimes it's the losing or it's the scraped knees, it's the face plants that ultimately, if you lean in and you try and learn from those mistakes, I know from my own experience, right? Those have been some of my greatest stepping stones to the next success, or sharpening a certain tool in my toolkit that may have been a little bit dull or maybe not even in my toolkit at the time. So that is a part of the real estate investing journey. I really think it's probably a part of the investing journey as a whole, right? Is volatility, challenges, losing a little bit of money, getting beat up here and there. Those are all a part of the path of progress. Or what do they say is like pain is a part of the path of progress. What you decide to do with that pain is ultimately what determines if you're going to elevate from it or if you're going to use it as an opportunity to, play smaller, right? So I think that's an important thing, whether you're a GP or an LP, is to consistently stay curious, ask questions, and always be looking to elevate your game, especially if it's a game that you want to play and win for the long term.
Yep.
Now, talk to me real quick on how does GP-LP match work, right? Because I believe, and you can correct me if I'm wrong, you guys aren't underwriting the deals or the sponsors. You guys aren't doing all the due diligence and things along those lines. So how does it work? And, what are the main reasons why an LP or GP should come to you guys to find quality relationships in the space of real estate investments?
So first, you are correct in that we don't do what I would call risk underwriting. What we do is what I would call accuracy underwriting. In other words, as you know, we have 20 plus filters on the LP side. And if I send the deal out to an LP, I want to make sure that I didn't screw up the filters, right? Meaning that the GP submitted a deal. Maybe they like misunderstood my question, right? And put in the wrong thing, right? So I need to figure that out, because if an LP sees a deck and it doesn't match their filters, they're going to be like, okay, that's not what I asked to see, and it's a frustrating experience.
Yeah.
I would say that, all filters take some time. The most expensive filter in terms of time is realized investments. So one of the things that LPs are able to select is, I only want to get deals from a GP that has had 3 realized investments or 10 realized investments. And the only way I do that is by hand. Like, we literally go to CoStar. And as you can imagine, there are many instances where like a 20 submitted by a GP comes down to a 5. And there's some cases that a 20 becomes a 0, because like
Right.
those are co-GP investments or LP investments, or they're not realized yet, meaning they weren't sold, right? So that is the amount of work that we do, which, to be candid, is like already a lot, because we tend to get like 5 deals a day. And all of that is free. Like, we don't charge either side to send the deal flow or receive it. Um, and I look to come back to your point, like, it is true that we don't do risk diligence. The point of this exercise is you can literally, within 30 seconds, I think that's right. Maybe you should test it and let me know. Maybe it's 60 seconds. You can sign up, tell me, I only want multifamily deals in Texas, for example. You click submit, and that's it. Like, once a week, probably ish, you'll get a deal from me. And, if you have some time, you're like, all right, let's check this one out. Oh, interesting. Like, this guy presents very differently than the guy last week. Oh, this one has the sources and uses, and the other one doesn't. Oh, this one has a loan guarantee. What's that? Like, I didn't know that people charge loan guarantees. Like, how do you calculate that? Is that a percentage of purchase price or the loan? Or, you know what I'm saying? So,
Right.
the entire exercise is, I'm not telling you, set your filters and like invest in every single deal. In fact, I would tell you the opposite. Set your filters, look at 50 deals, and hopefully you'll find one. If not, it's okay. Like, I'm not here to tell you what to do, right? The whole point is you should learn. And if something comes out that is very interesting, then maybe you should invest.
Yeah. What do you see is changing in LP behavior post, call it 2022? Obviously we have higher interest rates now. Development is very challenging economically to make things pencil. The kind of risk reward ratio has definitely shifted with, a lot that's going on in the economy and the industry. Have LP expectations, shifted? Are LPs becoming more conservative, more selective? Are they leaning towards a particular asset class or certain markets? Like, what are you seeing out there that's kind of getting traction, or at least, transacting from your perspective?
Yeah, sure. So I'll talk about retail first. On the retail side, meaning retail investors, like, let's call it sub-$1 million checks, let's call it. I think interest in multifamily has dropped.
Yep.
Some of that dropped off completely, meaning they're just like, I'm not interested in deals anymore. Like, I'm just going to invest in S&P. And my hot take of the day is, that's good. That's okay. Like, maybe they'll be back in 5 years. Maybe they won't. Either one is fine. But at least they made like a conscious decision after having a rough experience. The other aspect of that is, some of them are like, maybe multifamily is not for me. Let me look at some other property types. So I've had many retail LPs specifically filter out multi, even though their existing investments are in multi, and they're looking at other stuff, whether that be like industrial outdoor storage, medical office, industrial, mobile home parks, whatever. Like, they're just looking around for other things.
Little diversification.
Little diversification. And by the way, I would say worthwhile exercise. I think people, and my hot take of the day, also is like property types from the LP experience are much more reachable than they are from a GP experience. Meaning there's always a portion of like, I need to trust the GP to know what they're doing. You're never going to get rid of that variable. But analyzing like a medical office deal and a multifamily deal sounds like it's like, apples and oranges, but I would call them like different types of apples, right? Meaning they're actually much closer alike in terms of sort of your methodology as an LP to analyze. It is much more approachable than one might think. So that's what's happening. I would also note that I guess I think they're very related, right? So in my, I guess, philosophical, but I think it's true opinion, like splits and fees and prefs are all determined by supply and demand, right? How many deals are coming through, i.e. supply, and how much demand is there for those deals?
Yeah.
And if you as a sponsor push out your first deal at a 50-50 split with no pref and no co-invest, and it fills up, by the way, many of them filled up in 2021, you'll be like, well, shoot, like that was pretty cool. That must be market.
Let's do
And
more of
you know what? and you know what? I would say you're not wrong. It probably was market, right? Based on your sample size of LPs and that sort of economic time that was market. Now, nowadays, I'm seeing everything shift pretty aggressively to the LP side. Like splits are going up substantially. I've seen massive differences in splits in the past year.
Give an example of kind of what you're seeing right now in terms of, call it quote unquote market on an average deal.
Yeah. So unless you're like extremely experienced, I think it's like pretty tough to raise on a multi-deal without like an 80-20 above an 8 with like a 5 to 10% co-invest. I really believe that. And I've seen data to show that, meaning folks that raise at a more aggressive split or more aggressive pref or co-invest or whatever are just like less likely to be successful.
Yeah. And you just think that is due to, just the current climate and landscape of capital markets and, people being somewhat risk off and just the overall, sentiment in the industry.
Yeah. Again, it's just like, again, I hate to like over theorize it, but it's like in 2021, you lifted your hand and you're like, hey, guys, like
you could
2% loan,
a couple $1 million,
50-50 split. It's my first deal, but don't worry, it's going to be great. You would be fully raised in 24 hours.
Yeah.
And again, is that GP wrong for those egregious, in my opinion, terms? No, because that was market.
Right.
I mean, there's a whole other conversation about like, some of those LPs being upset now because they realized that wasn't fair. Like that's a whole other sort of conversation. But in that time, if you're a GP and you raise your money, your incentive is to get the best economics you can.
Yep.
Right? At least short-term incentive. Again, that's perhaps another hour we can spend on that. But like, that's at least your short-term incentive is to like make sure that you get the highest acquisition fee, you co-invest the smallest amount, and you get the highest promote. Right? Like, I mean, simply said. Nowadays, the same guy goes out into the field, so to speak, and he's like, hey guys, I already did one deal. Let's call it, let's say it's going well. I'm not sure if it is, but let's say it's going well. And here it is. Like, last time I did 50-50 split, this time I'll do 60-40. Maybe I'll throw in a 5% pref now. I'll do a 5% co-invest. Who wants in? No one responds. So what is that? To me, I mean, you can like, you can say people are excited about the stock market, about other options, but all of that to me is just saying demand and supply.
Yeah.
Like you can still engage those same people, but it's not going to be at those terms. That's why it's quiet.
Yeah, I mean, like you said, a 50-50, 60-40 split in 2020, you could get away with that. And like you said, my belief is more around do right by your investors, do what the deal supports, the merit of the deal supports. And again, if you have a grand slam type of deal and 60-40 makes sense, sure, okay. And there's a lot of,
Right.
conservative assumptions in there. You're not blue, sky scenarios. But the unfortunate thing was most of those deals in 2020, 2021, 22 is interest rates aren't going to go up. We're going to, have our debt and capital stack look great. We're going to continue raising rents, year over year, and there's no way they're going to plateau, right? I mean, it was just this time where, so I think, that all makes sense. But now, to your point, right, is the market has shifted, and there's a lot of other vehicles and opportunities out there that don't require necessarily the time and or have the same risk profile. But like you said, right, every asset class somewhat goes in its own, cycles. Just like the stock market and the economy has a cycle, so does the real estate industry.
Yeah.
And to me, it feels like we are, well, I know what my thoughts are, but I'm curious of like, what do you think heading into 2026 and going into 2027 and beyond? Are we, still in a very challenging season? What's your outlook on kind of, obviously we got potentially, the new Fed chair Warsh getting, brought in. He's got somewhat of a hawkish outlook historically, but a lot of people obviously are going, well, why would Trump bring him in if he's, not going to lower interest rates? That's a whole nother discussion, right? But it just in general, right? I mean, what is your thoughts on kind of the commercial real estate industry opportunities? A lot of different, variables in macro and microeconomics that tie into, this space. But what are you seeing and thinking going forward?
Um, I don't think it's going to be easy 2 years. I mean, I don't want to sort of broaden the horizon beyond that. Even 2 years is hard, and I've sort of learned many different times that I'm not great at predicting stuff. Um, I think at least from what I can see, um, I mean, I'm aware of a ton of deals that do not pencil according to the lender, and there still haven't been foreclosed.
Mm,
Um, some of those are being held at like 50 cents on the dollar on the lender's books. And I'm not even sure that they're worth that much. I mean, some of the like numbers are pretty massive in terms of dollars deployed within, like it's all, nothing compared to the, the Anthropic recent raise, right? Or
yeah.
OpenAI or all these other like or Nvidia, But within the real estate universe, there is a ton of workouts that I think are still there. They
Yeah.
need to be get worked out. And so I just can't imagine a case where we just like rip from here. I think I think we're still in sort of like the trough. Um, and I'm not sure that we're through it, to be honest. I hate to be so maybe pessimistic, but that's just what I see.
I mean, I would love to disagree with you, but I think my sentiment is pretty similar. I think we're still trying to I mean, basically everything we know, there's a lot of the, challenged assets and deals, right, are kind of right in the point of now and going forward, having to go through that workout of restructuring capital stacks and,
Yeah.
still working through construction challenges or operational challenges. So I do think, obviously, policy is one thing that weighs into, some of these crystal balls that we love to see. A lot of the data, shows and supports that there's still, some major headwinds on the industry and the asset classes as a whole. So it'll be really interesting, I think, to see. But, I'm one of these people that even though I'm somewhat like you, I wouldn't call it pessimistic, more realistic of what really is in front of us. In times of turbulence and challenges, that also is, where some of the greatest opportunities can get uncovered, right? So I always love to still breathe a little bit of optimism into LPs or GPs at the same time, but also just say like, hey, this is where you have to be double, triple on your gain than you would when things are really easy and you got people throwing money at you and deals are a lot more
Exactly.
plentiful coming across your desk.
Exactly. Yeah. I think that's well said.
Now, just as we wrap up here, what are your thoughts on how technology, kind of changes this landscape of, opportunities, GPLPs connecting, people finding deals, people managing and operating assets? Like, what are you seeing out there and what are you paying attention to in terms of, kind of how AI, tech, tokenization, all of this is kind of playing and circling around commercial real estate right now?
Tokenization, I know close to nothing about, so I'm not sure that I can comment there. In terms of the GPLP universe, I guess the verdict is still out, but I mean, I'm on a very simple but also hard mission, which is that like I think really good deals should not take a long time to find money for. Right now, I'm sure you can understand what I'm saying. Like every single GP thinks that their deal is the best,
Yeah.
right? And they should to some degree, right? But like if you zoom out and you look across, like the 1,000 deals today that are raising money. So out of those 1,000, I would say probably 20% are like categorically great, right? And they just can't find the right LP.
Yeah.
And so that's what I'm sort of after in terms of trying to solve. I'm trying to solve that problem. It's like the best deals and the best sponsors should focus on execution. Like they should find the right deal, they should post it, get some money, and go to execute. Right. And so that it's a very tech enabled solution. And I mean, to your point, we've rolled out a ton of AI stuff on both sides to help GPs and LPs alike. More broader, zooming out of GPLP match, I would say, um, it's, I think as of right now, there's so much hype around like AI
Yeah.
and all its changes. Um, but then like you try it and look, it could be that I'm just, not very good. I don't know. But like when I try this stuff, some of it is helpful, yeah, but some of it is like it's so confident and it's so wrong at the same time. You're just like, wait, like stop, like what are you doing? That's not right? And they're like, oh yeah, here's another answer. Again, like totally wrong, doesn't make any sense. It just hallucinates. That's what my CTO calls it, right? And that's where I sort of get concerned is like, someone asked me like at what point is there, there's like robo advisors for people on the public side,
Yeah.
right? So at what point is there a robo advisor for alternatives? And honestly, we're probably not that far away, is my guess. But like the really interesting question, maybe we could end on this, is like, is that a net benefit to the LP,
Mm.
right? Um, Meaning the alternative is don't invest in alternatives. A. B. Learn alternatives yourself.
Yeah.
And invest yourself. That's B. And C is like click a button and Robinhood will do it for you. I'm not saying they're going to be the one, but let's call it. Whatever they're going to be called. And so, yeah, I don't know.
It,
Like,
it's a loaded question, right? I mean, my belief is that, to your point, we use a lot of, I mean, we've got AI agents built out on my asset management side for my own portfolio. And there's still a lot of bugs and a lot of learning curves and a lot of things that still, need to go a long way in order for it to really make sense to leveraging the trust that, I think a lot of people romanticize about with AI, right?
right, exactly.
And to the other side of it too is I believe that if you're really going to task yourself and have a goal of building wealth, whether it's in real estate investing or it's crypto or the stock market or whatever it may
Right.
be, it wealth building truly is something that you need to become financially literate and understand if you want to not only get it, but you want to sustain, keep it, and grow it. And so, while I would love to say at some point in time, I'd love to be able to, delegate and leverage that, trust and skill set to a machine, um, I would still encourage people, obviously to continue listening to podcasts like this, to follow. I mean, you've got an amazing, is it Substack that you put your newsletter on?
Yeah.
Yeah, you
So
got to, I've been following your newsletter for some time and you put out great content there. But like, you really have, if you want to win the wealth building game, you have to lean in and learn and play the game and understand it, right? Like an AI can do all that for you, but if you don't know what it's doing, there's no checks and balances, and you really don't understand what to do with the information it's giving you, then you, in my opinion, you're really not going to win the game long term. So I guess we can end on that one, right? But I know for a lot of people who want to learn more about GPLP match, whether it's a GP and they got a deal and they want to connect with more LPs, whether it's a high net worth individual or a high income earner, or it's just somebody who's got some cash that are going like, hey, I want to connect with more deals and see more, GPs. What's the best place for them to connect with you? Follow your newsletter, follow and, connect with your brand, the website. Where can they go ahead and do that?
yeah, just gplpmatch.com. And if anyone wants to reach out direct, it's just Aleksey, which is my first name, at gplpmatch.com.
Aleksey, thanks for coming on the show today.
Thanks for having me.
Well, that wraps up today's episode. Thank you so much for tuning in. As always, you guys know this show would not be what it is without you, the amazing listener, the support, sharing this out with other people who can gain value from it, taking 60 seconds to leave a review. If you haven't done so already, those things mean the world to us and ultimately help us spread this message out to as many people as we possibly can to help them on their wealth building journey. If you have any particular links or resources that you're trying to track down that were mentioned in this interview, be sure to check out this episode at MillionaireMindcast.com, where you can find access to all that information. And of course, if you haven't checked out the Wise Investor Vault yet, be sure to head over to wiseinvestorvault.com to check out all the tools, all the resources, the checklists, the spreadsheets, the trackers, all kinds of amazing things that can help you on your wealth building journey at the wiseinvestorvault.com. If you haven't connected with me on social media yet, I'm consistently putting out more content, stories, value to help you on your wealth building journey. And one of the best and most exciting things for me on a weekly basis is getting to connect with you guys. Getting your DMs, hearing what things impacted you, what you need help with is a big way that we continue to drive the content for this show. So if we're not connected and following each other on Instagram, on social media, at official Matty A, give me a like and a follow. Would love to connect with you there. And of course, don't forget to get on my deals list. If you're an accredited investor, you want to look at more deal flow, you want to see what deals I have access to, what deals I'm raising capital for. This is an exclusive list that I only put out to my accredited investor list, my Millionaire Mindcast family. So text the word deals to 844-447-1555. And with that being said, thank you again so much for supporting the show. Until next week's episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.